Everyone, welcome to today's session. Today we'll have a look at top 5 tax planning mistakes before June 30, basically before the end of the financial year. Okay, before we go to the main content, a quick declaration. The information provided is for general guidance only and should not be considered as personalized tax advice. We recommend consulting a qualified tax advisor or planner before implementing any tax planning strategies. Please note that we're not licensed financial planners and do not provide financial product advice. For tailored investment guidance, consult a licensed financial planner. All right, let's have a look at the 5 top mistakes. Okay. First one, missing the super contribution deadline. The super must be received by the super fund before June 30, not just paid. Okay, so this is one major mistake we noticed before. People believe, okay, as long as pay it before June, that if you paid on the last day, but it's not received in your super account, it's not counted as deducted in the financial year, and then you're going to miss deduction. So BPay and clearinghouse delays can cost your deduction. Okay, plan transfers by at least 1 week in advance. If you want to make sure, maybe by mid-June, you should do your contribution. All right, so for our annual tax planning sessions, we normally would recommend people to do it latest with us before mid-June. Okay, for that reason, so that you can still have enough time to utilize all the tax planning strategies before the end of the year. All right, that's the top one. Okay, let's have a look at the second one. Overlooking super cap limits. Okay, this is important too. So the concessional cap is 30K per person. So that's including employer super guarantee. This is important. It's not only on your own contribution, it's including super guarantee. Basically, what your employer is contributing for you as a part of your salary wages. Okay. And the excess contributions may result in additional tax and penalties. So you can also potentially consider carry forward unused cap if your super balance is under 500K. Yeah, you have 5 years to do that. Okay, so always check total year-to-date contributions before topping it up at the end of the financial year. All right. Third one, assuming all asset purchases are immediately deductible. Okay, this is more applicable to a business, okay, business owners. Not all assets are instantly deductible. Capital items may need to be depreciated unless under small business instant asset write-off thresholds. Okay. Timing matters. Asset bought after June 30, no deduction this year. Okay, be very careful. So the cap for an individual employee is $300. Okay. If you buy anything more than $300 and you can use it for 12 months, that's going to be treated as a fixed asset. Fixed asset need to be depreciated. For a small business, okay, you can claim 20K, okay, up to 20K per item as instant asset write-off. So that's have been extended to the end of the 2025 financial year. So you can still do that. All right. But make sure you do purchase it before June 30. Okay. And then the fourth one, poor capital gains tax timing. Okay. This one is actually really penalizing. We had clients who had to pay more than 100K a year. Yeah, if they planned earlier with us, they could have saved at least maybe half of that, or even if a few years back, even all of it. Okay, so make sure you talk to a tax planner like us first, someone who's experienced with property taxes. Okay, so selling before June 30 can trigger large, unexpected CGT liabilities, not offsetting gains with available capital losses, missed savings. Okay, holding assets less than 12 months, you're going to miss the 50% CGT discount. So on the top one, yeah, selling before June 30, we had clients who planned to sell 3 properties in one go, uh, uh, before the end of the financial year, for no particular reason. Yeah, they're not short of cash or anything. Just happened to be the plan. Then we have recommended or strongly recommended them to postpone 2 properties to the following financial year. Then they have saved 50K, yeah, right away. Yeah, because shifting the property sales to a different financial year, that will help you to save your capital gains tax, because capital gains tax is added on the very top to pay your marginal tax rate. Okay, so it's always better to spread property sales over to different years to help you to reduce tax. Okay. Second one, not offsetting gains with available capital losses. Yeah, you need to keep a good record of capital losses. Normally in your prevailing report, it should be recorded, but occasionally we did notice sometimes tax agents might make mistakes, or if in case it's not flown through from the prevailing report and it's actually missed and not filled in, then you actually lose the capital losses in one year, then you will lose in future years. So make sure you keep a good record yourself as well. Okay, holding assets less than 12 months, that's quite common. Yeah, I think it's happened once or twice in the past that someone, they could have held the shares for just more than a few days, and then they could have the 50% discount, but they have sold only a few days earlier, then they lose the 50% discount. So that's actually really penalizing. So be very careful. All right. Okay, number 5, most important. Of course, it's only a short session today. We can only cover a few notes, a few important points, but there are so many other tax planning strategies you could potentially utilize before the end of the financial year. So very important, contact your advisor as early as possible. Okay, so probably May, June. Yeah, once you have a good understanding of your total income for yourselves and your businesses, talk to a tax advisor like us. So many tax saving strategies require action before June 30. Late trust resolutions, super payments, or structuring advice. That means you have a lot of missed opportunities. Okay, a quick review can save thousands of dollars in tax, sometimes tens of thousands. Yeah, last year, I think with one family group, we have saved the 100K, more than 100K, okay, for 1 year. So this is very important. So make sure you book a pre-end of year review with us, okay? If you're a high income earner with rental properties, or if you're running a business, but we could potentially help you to save thousands of dollars, if not tens of thousands. All right. Okay, final message, plan ahead, act early, save more, and basically talk to us before June 30. All right. And um, a brief introduction about myself and also our contact details. So if you have any questions, if you're interested in our end of year financial planning session or tax planning session, let us know. All right, thank you very much. We'll see you in our next session.